Oil, or in this case, we're looking at US WTI. Now, according to the CFTC's latest CO2 report, if we want to convert the lots positioning that exists amongst the larger speculative traders into percentage terms, you can see that they're holding an extreme long bias of 78%, which stands in significant contrast to retail traders holding a slight majority short bias of 52%. But how exactly did they get there? Now, in this case, we're going to map sentiment onto a price chart. And when we had that supply side shock back in September, now we're going to map sentiment onto this price chart, retail sentiment in blue dotted line, institutional sentiment in green dotted line as percentage long. You can see exactly that retail traders, when prices were dropping, they were averaging into the long side, shorts were getting out and taking profit, whereas larger speculative traders were actually reducing their extreme long bias. Now, in the case of retail sentiment, it reached to an extreme long bias of 87% at one point. But what ended up happening was, because you had a lot of range trading and consolidatory moves, what that does is it forces a lot of trend traders to shift towards range trading and taking profit a bit too soon. So 87% extreme long has now become a slight majority short, 52%. But of course, the question on everyone's mind is, did they take profit just a little too soon?